All right, we are back for another conversation about financial markets. I'm joined, of course, by Vuk, and he is here to talk about what's going on in the US as well as the global economy, financial markets. And as always, nothing that we say should be construed as investment advice, but we love to talk about what's happening. Two of the biggest things this week are to talk about what's happening with the Treasury and with the Fed. And with that, Vuk, can you give us some insights into what's happening with fiscal and monetary policy in the US in the first quarter of 2024?
Sure, thank you, Scott. It's great to be back. We haven't done these podcasts in a while. Uh, Hope to have them more regular from now on. Yeah, this week is particularly interesting because, as you said, we have two big major policy decisions coming up. The quarterly refunding announcement from the Treasury, so fiscal policy, and the standard FOMC meeting from Fed, so monetary policy. And they're kind of interesting because the last two times that these two events coincided, so you typically have the quarterly refunding announcements of the Treasury every quarter. So last time that was on November 1st, and before that on July 31st. After these two events, and then again coinciding with the FOMC meeting that was either on the same day or a couple of days before, you had major moves in the market, right? So you basically these two events moved markets a lot over the next period. Back in August, end of July, beginning of August, it was a start of a sell-off, if you remember, right? So we had a situation where the whole year markets were kind of going a little bit up and down. They had a strong rally in kind of during the summer, like May, June, July, and then essentially from August, after the QRA, after the Treasury announced a much higher than expected issuance of long-term bonds. Well, this affected their prices because you have more issuance, so bigger supply, supply bigger relative to demand. What happens to the price? Prices go down, right? Yields go up. So that was kind of the situation. And the same thing obviously affected asset markets as well. So after these two events, you had a sort of a decline over the next 3 years, a sell-off over the next 3 months, so August, September, October. And then, interestingly enough, this whole thing was averted, and we engaged in another massive rally after the November both fiscal and monetary policy decisions, where things started to go up all of a sudden. So it was a complete reversal of what happened last time. The Treasury decided to issue less than expected long-term bonds, obviously, again, affecting their supply, affecting their prices, affecting their yields. And the same thing translated into equity markets, especially since the FOMC added, let's say, fuel to the fire by deciding to pause interest rates and kind of announcing that from now on there probably won't be any more hikes, which was true. We didn't get any more hikes, and by the end of the year, a lot of people have been pricing in interest rate cuts, right? So at this point, the market is pricing in between 5 and 6 cuts by the end of the year, therefore we are at all-time highs. So a very interesting situation. So now what we're trying to guess what's going to happen this week. Do we get a continuation of that bull run, or do we get a correction because of fiscal and monetary policy?
Okay, so let's talk about that. With
Yeah.
the possibility of a bull run or a correction, based on these two events, some of the news that's coming out or surrounding these events, and based on your knowledge of financial markets, what do you think are the most likely scenarios, and what would cause those scenarios to happen? Or, in other words, what would happen at either these fiscal or monetary meetings that would lead the market either to continue its rally or to make a very quick correction?
Right. So again, guiding ourselves with what happened in the past, I think we can basically gauge two different scenarios, two potential scenarios, two potential outcomes, right? The first one would be the one that's more or less, depending on whom, but a little bit more expected would be that we would have a sort of so the Treasury would once again increase the issuance of long-term bonds. And if that happens, we would get another sell-off, right? We would get another correction. It might not be as big as the one that we had from August until October, but nevertheless, it would entail a correction simply because we're doing the same thing again. We're messing with supply and demand of bonds, and if you're doing that, you're affecting their prices, affecting their yields. and it translates into equity markets. Why does it translate into equity markets? Well, because, let's just put it very simply, um, let's say that you are an investor and all of a sudden, the bond yields keep going up, and you have an option of putting part of your income in an uncertain environment into an asset that's yielding 4.5%, 5%, right? You'd rather do this than keep it in equities. So there's this translation of basically moving assets from equities into bonds, at least in the short term. And this happens on a retail scale, happens even on an institutional scale. So that's why you have these two time. In terms of monetary policy and the Fed decision, it's all about whether we get whether the cuts that are currently being priced in are realistic or not, right? So at this point, we have 5 or 6 cuts being priced in for this year. If the Fed decides to dampen those expectations and just say, well, we're probably not going to cut that much. We're probably going to stick to lower. We're not going to cut now. Then they won't cut on this meeting. That's pretty much priced in. The question is, are they going to cut in March? So if they signal that they're not going to cut in March, then expect a correction. If they, however, do, if they really, become more dovish and do indicate that it will be cutting in March, then I can expect another rally, even despite of what happens with the QRA. So again, there's different scenarios, right? And whatever happens with these, we have to look at both of them. So what we will do essentially in terms of positioning is wait until both events pass, and then judging on what happens, we'll basically decide whether we are long or short, or is there basically no signal at all. But I think it's going to be either a very very strong signal in either directions. So we'll see.
So in terms of decisions that you expect, do you have any expectations of what you believe that the Treasury will do, what the Fed will do? Do you think are there any signals or indications of what is likely to happen, or
Well,
what
I would,
decisions are likely to make?
yeah. So personally, I would put a higher weight on them engaging into it's like doing a sort of behavior that would entice a correction. So I would expect more bond issuance, and I would expect the Fed to be a bit more hawkish than expected. If this happens, so that we can get this correction. However, we are always nimble and keeping our options open, and this is something that we are communicating regularly through our paid newsletter. So whoever is interested might can join in and observe exactly how we are about to position for this week. But in terms of overall, I mean, another thing that we're kind of taking into account are electoral considerations, right? So this is an electoral year in the U.S., election year. And yeah, so the current administration obviously has an incentive to stay in power. Surprise, surprise. And this means that they're probably going to be less reluctant to cause any big problems to the economy, at least now, right? Maybe they postpone all of these things after the election, which is going to be a long time because there's a year left, or at least 10 months left. But again, it's not it's not unimaginable, right? So it could be a potential option on the table. So with that, however, on the other hand, I would kind of think, okay, if I was a policymaker, maybe get it out of the way now, so that we can make the economy stronger during the summer and just before the election to help the current administration. That's what I would do as a policymaker. Again, a very dishonest policymaker, trying to keep myself in power. But we'll see. We'll see what happens.
All right. Thank you as always, Vuk.
Thank you, Scott.